Stephen Koukoulas, welcome back, mate.
G'day, Mark. Great to be back, and what a month we've just had, and what a month ahead of us.
There's just data's flying around all over the joint, not just locally, but domestically, I should say, but globally.
Yep.
And if everyone's been terrified of a recession, and of course the US GDP numbers came out, and it looks pretty good. It doesn't look like they're going to go into negative GDP anyway, or negative growth. So, what do you make of it so far, mate?
Yeah, well, despite the rate hikes from the Fed, and they've hiked more than us.
Yeah.
We saw the June quarter, the second quarter GDP figures coming in at 2.4% annualized rate of economic growth. That's plus 2.4.
Yeah.
And for the US economy, that's a long way from a recession. So despite the rate hikes, consumers are still spending. Businesses are still investing. So a lot of that, what do we call it, the IT spending, artificial intelligence, all that sort of stuff is really driving the economy. So the big corporations, the massive five tech companies are still investing. That's GDP. They're still hiring. US unemployment's like ours in Australia, around about 3.5%. So in a funny way, it's a bit like the Goldilocks economy. Not too hot, not too cold, just right. And the inflation rate's coming down as well. So, I think the US might just get through this period of really aggressive rate hikes, growing at a slower pace, but no recession. Unemployment probably ticking up, but not too much.
So that's important. Just go back a step. If inflation is coming down, it's quite a lot down relative to Australia. Inflation in the US is only 3.5 or something like that.
It's down to 3. It's gone from 9% in the middle of last year down to 3.
Right, 3.
Big fall.
What's interesting about that, Steve, is that and one of my theses is about all the inflation is all the inflation's been imported, and it's all supply chain style inflation. Because what's interesting about that is I think it's fair enough to say, and I'd be interested to hear what you've got to say about this, that the interest rate increase regime in the US, which has been far more aggressive and started far earlier than we did in Australia, and is much higher, didn't have a big impact on people in terms of spending, etc., because they have a fixed rate environment there.
I was waiting for you to say that.
Yeah.
Correct. We know that the bulk of mortgages in the US are 30-year fixed. So these rate hikes from the Fed doesn't worry me. I took out my loan 5 years ago and I've got 25 years to go if I'm a US citizen.
Yep.
And so I've locked in my rate.
So I'm still paying the same rate today.
Correct, as I was 5 years ago when I took out my loan.
Correct. So
Whatever
your interest
that
rate
rate
rise
is.
have done nothing to me.
Correct. What they have impacted is the business sector. They impact on the US dollar too, because as the US dollar goes up, and with the Aussie dollar's gone down, as the US dollar goes up, it's actually a constraint on their economy. It actually dampens their export sector, which is one way to slow the economy down. Having said all that, the impact of rate hikes also shows up in what we might call, for investors, an asset allocation decision. The US 10-year government bond, sort of linked to their monetary policy interest rate, is now 4%. So if I'm an investor sitting there, I invest in stocks or bonds getting 4% pretty much risk-free. So as interest rates go up, I'll take my money out of the stock market falls, you get a wealth effect, and as people feel less wealthy, that's how it can show up on consumers, because the US, I think, is the highest per capita ownership of stocks in the world. So if the value of your portfolio drops by 10, 15%, you might think, oh, damn it, I'm not going to spend as much. So that's the other transmission mechanism in the US, whereas in Australia, you're quite right. We've got 85% of mortgages are floating, variable. So when the RBA here tweaks them up, you pay it, and that's how it works. So we get a really more dramatic and quicker impact, which is why the RBA, one reason why they haven't hiked as much as the US. They don't need to.
They didn't need to. So
yes,
the US is still looking like they're going to continue to grow at a reasonable clip.
Yep,
2.5. Reasonable.
Yep.
Well, better still, they're not going to go in a recession. Looks like it at the moment. That's a good story. 2, they may not put interest rates up again. Well, they may not need to put interest rates up again, given where inflation is looking as it's heading in the right direction. But also, we're not going to import their inflation into Australia anymore, because if they've got their inflation under control,
correct,
we're not importing their inflation into our country.